Hello everyone, this is today's video analysis for June 6, 2019. Today we're looking at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. Now last week we had a great opportunity to see a profitable trade buying right around the 0.6920 level, capturing profit all the way up to the 0.7000 level. Pretty decent opportunity last week. Let's go ahead and look at that real quick. Let's zoom it in. Had the downtrend, black trend line. The market was moving lower. Found support down here at the blue zone. Got above the purple zone. Take a look at last week. Sat on top of that purple shaded area. Again, that's 0.6905 up to 0.6920. Sat on top of there for several days. We had an opportunity to go long. Sat there for a couple of days, and then finally the market moving higher all the way up to 7,000, the pink shaded area up here at the top of that run. Now we've seen the market open and close above the yellow zone, dip back down to the yellow zone, setting above 0.6970. So the expectation is very similar to what we saw down here at the purple zone. The expectation is, as long as it stays above the yellow zone, we expect support, just like what we saw down here at the purple zone, where we expected support as long as it stayed above it within this rising trending move that we see here after breaking above the black trend line. So our expectation today is staying above 0.6970, targeting again back to the 7,000 area. That's still our next resistance level. Beyond there, this green zone, 0.705065, becomes our next resistance target, and that's not too hard to see. If you look right here, you know that above the pink zone, the green zone, is your next targeted level. So above the pink zone, 70.15 or so, we'll look to target the green zone if, of course, the market continued to be bullish here for the Australian dollar. So as long as it stays above this yellow zone, I'll be looking for clues and evidence of support and infusions of buy orders and targeting back to the pink zone. Risk at this point, we just don't want it to get back under the yellow zone. If you decide to go long above that yellow zone, you don't want it to go below it. Just like above the purple zone, you didn't want it to get back below that as well. So risk and stop loss underneath 0.6950. Holding or buying above the yellow zone probably as close as possible to reduce that risk. That's really what I'm often looking for, is reduced risk. Buying now carries higher risk. Let's see. Let's just assume for a moment that red line is my stop loss from current market price down to that red line. We're looking at about 45 pips. But if I wait for that little bit of a dip back down to the 70 level, we're reducing that down to about a 30-35 pips. So you're cutting 10, maybe 15 pips off the risk just by letting the market get as close as possible to the yellow zone before buying, and then targeting, of course, the pink zone. That means your potential profit target is much farther as well. If you were to buy right now at the current market price, just to the bottom of the pink zone, you're looking at about maybe 15 to 20 pips. But if you wait for the buy down here at the yellow zone, you're doubling that to 30 pips back to the pink zone. So again, you have lower risk and higher potential reward if you just buy as close as possible to the yellow zone, targets the pink zone, maybe the green zone if it breaks above the pink zone. But still, what we're looking for is low risk. And again, the risk here is that it turns around and gets back underneath the yellow zone. 4-hour time frame doesn't change that expectation at all. It just shows that already we've seen the market tackle this yellow shaded area a couple of times actually, this morning. I don't know if it's coming back down here today or not. We'll have to wait and see how the market handles the news over the next hour or so. But a dip back down here of 69.70 may provide another opportunity to get in. Target the pink shaded area or higher. The risk is a break underneath. Keep an eye again on the news. That may change some of that, but right now that seems to be the opportunity today for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.